Ladies and gentlemen, good day and welcome to the H2 FY23 conference call of Sealmatic India Limited. A statutory notice. All content on this earnings call is for informational purposes of a general nature only and does not address any circumstances of any particular individual or entity. Do not construe any such information or material as legal, tax, investment, financial, professional, or any other advice. Content on this earnings call does not represent or constitute any solicitation, inducement, recommendation, endorsement, or offer by Sealmatic. Any information, materials, statements, and/or data set out herein is subject to change anytime without notice, and as such, no reliance must be placed on fairness, accuracy, completeness, or correctness of any information and materials contained on this earnings call. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the remark from the company concludes. Should you need assistance during the conference, please signal an operator by pressing star, then 0 on your touchtone phone. I now hand the conference over to Mr. Umar Balwa, Managing Director of Sealmatic India Limited. Thank you, and over to you, sir.
Thanks, Darwin, for this introduction. And a very warm welcome, ladies and gentlemen. Good evening, and welcome to this earnings conference call of today. Before I begin with a formal address, I take this opportunity to express my heartfelt gratitude for taking the time out of your busy schedule and accepting our invite and to be part of this call. Since this is our first address to the investor community as we got listed on the BSE SME platform on March 01, 2023, I would also like to take this opportunity for the trust kept by our shareholders and the keen interest expressed by investors and analysts in our company Sealmatic. I will take a few moments before I come to various facts and figures for the year that went by. I will give a brief insight into who we are and our journey in the business of mechanical seal. Our journey dates back to the year 1989, where we were a small indigenous company. Thereafter, we entered into a 51-49 joint venture with Bergman of Germany in the year 1993. The company was very successful over the years, and then there was change in hands at the parent company in Germany, which got taken over by a larger conglomerate called Berg. Result of which all joint venture and subsidiaries across the globe got acquired by Berg. In 2007, we sold our 49% share in the company Bergman India Private Limited. In 2011, we restarted our journey in the business of mechanical seal as Sealmatic India Private Limited. Our products are exported to more than 45 countries across the globe. We work with Fortune 500 companies such as Reliance, IOCL, BPCL, HPCL, GAIL, NTPC, NPC, so on and so forth. We are OE suppliers to the leading pump companies globally such as KSB, Sundyne, Sulzer, KEPL, and many more. We are API Q1 certified company, ATEX, Department of Science and Industrial Research, ISO 9000, and many other certifications. We are currently undergoing our certification for ISO 19443, which will qualify us for critical business in the nuclear power plants. We would be the only company as a mechanical seal company globally who would qualify such a coveted certification, and the second company in India after L&T. So this speaks volume for our commitment to standards and specification. And this will also open new doors for high revenue, high profitable business in the nuclear power plants in India. Our products find application in refineries, oil and gas, chemical, petrochemical, chemical, fertilizer, pharmaceutical, power, marine, pulp and paper, food and beverage, aerospace, and many more industrial applications. It gives me tremendous pleasure to present to you our progress report for the year ended March 31st, 2023. In many ways, the year was special for all of us in the history of Sealmatic. On March 1st, 2023, Sealmatic shares were listed on the Bombay Stock Exchange on the SME platform. The IPO was oversubscribed by 16.6 times, as we all know. This historic milestone could be achieved only because of the strong foundation laid by our dedicated employees with their persistence and commitment. I am sure we'll continue this legacy of delivering value to all the stakeholders over many years to come. Sealmatic succeeded in increasing its turnover by around 31.4% to INR 596 million. This shows the demand for Sealmatic products is very strong and is being driven by developed markets in Europe, North America, and India included. It was also particularly pleasing that our international business not only developed well in time of limited travel opportunities, but also delivered a very satisfactory contribution to our profits. The year 2023-2024 will mark the beginning of a decade of technological transformation. Sealmatic will play a formative role in shaping this within the sealing technology, supported by the recognition and certification from Ministry of Science and Technology, coupled with a host of other valuable certifications and qualifications by international accreditation bodies. In 2022-2023, we developed a long-term strategy for the next 5 years under the title Sealmatic Beyond 2028. As our focus remains exclusively on sealing technology, we will not only remain committed to our industry, but we are also prepared to assume even greater responsibility for the development of highly engineered mechanical seals. With our focus on people and sustainability as a core value, we look beyond the boundaries of the company and will solve the challenges of sealing technology together with our customers. We have been successful in meeting the market demand by continuous investment in our plants, new product launches, research and development, and infrastructure. This definitely will add approximately 60% to our capacity. Our common factory expansion, which is 16 kilometers north of the existing plant in Mira Road, is on track, and by the end of 2023, it shall be fully functional, thus adding 60% capacity to the current infrastructure. To support our research towards new product development, we are investing in state-of-the-art equipment to develop products such as dry gas seals, metal bellows seals, and host of other exciting products. This will add high profitable revenue for the company. We'll expand our footprint in southern and eastern markets in India. We are in the process of setting up sales and service centers in Chennai and Kolkata as we speak. Further investment is on the drawing board to engage more deeply in markets such as Europe, USA, Middle East, and South America. Sealmatic is the only indigenous mechanical seal company which has been qualified by DHL for the 210 megawatts, 500 megawatts, 660 megawatts thermal power plants for critical equipment such as boiler feed, booster, and condensate extraction pumps. In addition to the above, our company is also the only mechanical seal company globally which has the certification from API Q1, which comes from Washington in USA. The year 2023 commenced on a buoyant note with a healthy order booking on hand. A robust strategy for 2023-2024 has been put in place, resulting in high engineered mechanical seals for critical applications such as the FGD, which is the flue gas desulfurization, boiler feed pumps, API 682 pumps for oil and gas, refinery, petrochemical, and other critical applications. We made solid progress towards awareness and behaviors around diversity, equity, and inclusion, with many of our managers completing our comprehensive inclusive leadership training program held in the last quarter of 2022. We have undertaken various CSR initiatives for development of society, including education, healthcare, destitute care, women empowerment, etc. We are committed to improving the recruitment of female employees and the promotion of underrepresented positions in senior management. In 2022-2023, female employee recruitment was considerable. Particularly in times of major change, the backbone of business is its employees, shareholders, and customers. We would like to thank all these people for their loyalty and trust in Sealmatic. I will not go on a rant. I will not hog the limelight. I will now hand it over to Ratan Kandare, who is our CFO, to share important vital details about the year that went by.
Thank you, sir. Good evening, ladies and gentlemen. I am pleased to share key financial highlights for FY23. The total revenue of the company stood at 596.15 million at FY23 as against rupees 426.34 million in FY22, showing a growth of 39.83%. The company reported EBITDA of rupees 162.48 million in FY23 as against rupees 121.82 million in FY22, showing a growth of 33.38%. On a year-on-year basis, the PAT of the company surged by 31.44%, rupees 109.81 million in FY23 as against rupees 83.54 million in FY22. Now coming to the H2 FY23 financial highlights. The total revenue of the company stood at rupees 337.93 million in H2 FY23 as against rupees 218.05 million in H2 FY22, showing a growth of 54.98%. The company reported EBITDA of rupees 80.27 million in H2 FY23 as against rupees 56.74 million in H2 FY22, showing a growth of 41.47%. The PAT of the company surged by 46.13%, rupees 55.46 million in H2 FY23 as against rupees 37.95 million in H2 FY22. Once again, thank you all for your attention.
Thanks, Ratan, and I will leave the floor open for taking questions now.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Avinash Gorakshakar from Profitmart Securities. Please go ahead.
Good afternoon, Umarji, and congratulations for a very strong performance in FY23. I've got two questions. One is I wanted to understand, what is the kind of, ground level signals you're getting, because you cater to a lot of core sectors, core sectors like oil and gas and, refineries, petrochemicals, fertilizer, paper. So if you could share with us, what is the kind of broad outlook you see, for our company in terms of the mechanical seal market, especially from the domestic market, although we know that, almost 70% comes from exports. And my second question is to the CFO. We saw that in this current year, FY23, the operating cash flow was in negative. So we just wanted to understand, why was working capital slightly elevated for the current year? If you could share your thoughts on these points.
Mr. Gorakshakar, I'll first take that question and then I'll hand it over to Ratan. The ground level signal for our industry, maybe oil and gas, refinery, chemical, petrochemical, is absolutely positive and buoyant. I'll just give you a small example about IOCL. Just per se is investing 1,25,000 crore in various projects across the refineries in India, right from Baroda until Paradip. And the investment is going to be implemented in the next 3 years. And so that's going to be a surge of demand for our products. And the similar, signals are there for petrochemical, chemical, and pharmaceutical. Power plants, of course, nuclear is on a very strong, tailwind. So we see great signals and we see huge demand for our products. I'll hand it over to Ratan for that question on the cash flow.
Hello. Hello.
Yes, sir, we can hear you.
The cash flows are not negative. We are investing in machinery and all that. Therefore, it is decreasing slightly.
No, we are talking about the operating cash flow. Operating cash flow, as I see it, for the year FY23 was minus 24 crores. I would like to know that, previous year it was positive. So any specific reason why working capital, requirements had shot up, especially inventories, debtors? If you could tell us on that side.
We are continuously investing in inventory and this one. Slightly because I think my creditor are increasing and debtor are also increasing.
So, but then what can we expect in the coming years? I mean, will this number become positive?
It will be good in next coming year.
Okay. And what was the reason this was elevated? If you could tell us that inventories and debtors, what was the reason this got increased in the year financial year FY23? Because on all other parameters, the performance of the company has been very, solid. So working capital, why did it increase? Did you have to give any more credit to your customers?
Maybe I can answer that question more efficiently. The primary reason is that we are doing a lot of project activity here in India, whereby we need huge investment on various instruments and other items which are long lead items. For example, transmitters, due to the shortage of the chips and semiconductor industry is slightly more stressed. So we need to keep huge inventories for such items. So that is increasing our inventory over here.
Okay. Umarji, just one small question. Going forward in the next, say, 1 to 2 years, can we expect that the operating cash flow actually starts getting generated on a positive level? Because this is a very important variable which market analysts monitor. So your thoughts on this, please.
Absolutely, it will be much more. What we see today, it will be significantly improving in the coming years because we'll be doing more and more of end user business as well.
Okay. And Umarji, any broad idea what could be the kind of capital expenditure for FY24 from the company side?
Well, as we have envisaged, investment into the second plant and also R&D, we are on track with our investment as mentioned in our red herring prospectus. So that's about close to about 12 crores.
Okay. 12 crores will be invested.
Yes.
And one last question, Umarji, which is very closer to, I think, your heart as well as to your business, is that if you could tell us something about the operations and maintenance part of your business, like I believe it's a very big opportunity and it's very profitable. So if you could share some color and give us an overview on this part of the business.
Yeah, actually the O&M business, we call it as O&M over here in our industry, would significantly improve in the next, after 2 years of period of investment into OEM and projects. So all these fields which will go to the end users would generate a lot of operation and maintenance business, which would work on a high level of profit because the cost of goods are much lesser for such sales.
So do you believe that in the next 2 years this O&M business will start contributing to your revenue, in a meaningful way, right?
Absolutely.
Okay. Anyway, I think thank you, Umarji, and all the best to you and your company.
Our pleasure, sir.
Thank you. The next question is from the line of Hemant, an individual investor. Please go ahead.
So thank you for providing the opportunity and congratulations on a very good set of numbers. Sir, as per my understanding, the new capacity is going to be commissioned by Q3 of FY24, it is current fiscal year. So sir, what will be the asset turn of that capacity at peak utilization, and how do we see the revenue in FY24 and FY25?
The additional capacity which we are envisaging in Kaman, which is about 20 kilometers north of where we are sitting at the moment in Mira Road, that would be fully functional and operational by the end of the year as we speak, and that would add close to about 60% in our capacity of production, and an equivalent amount of surge will take place in terms of the top line.
So, but sir, that will be from FY25, the next financial year. So what kind of growth we can expect in FY24?
I mean, historically, if you look at the performance in the company, we expect similar performance for the year, for this year, FY24.
So I don't have the right number. I don't have the number in front of me. If you can quantify it, sir, very great.
I'm sorry, sir. I didn't get that.
Sir, I don't have the number with me right now in front of me. If you can quantify the number.
The number of the FY23 was 59.6, and we saw a growth of 31% approximately over the previous year, and we see similar growth pattern for us, and there is a robust demand for our products. We have many project inquiries, and we feel confident that all those inquiries would be converted into sales.
Sir, 30% growth in FY24 and 60% growth on top of it in FY25 because of the new plan coming in, right?
True.
And any improvement in the margins, sir, as the RM prices are coming down, have come down actually?
The margins would definitely improve. I mean, that's what we call, as our, as our golden period would start from, the year 2026, when all these projects which, are being, commissioned at various stages, and then the O&M business would start from 2026. So that would, contribute significant revenue on the top line and also increase our bottom line. So definitely we see improvement on our bottom line as well.
Any other expansion plan apart from this? Like this is going to be completed once we fully utilize it. As you told us that the demand is robust. So any other capex plan lined up?
Right now, what we have discussed, that's on the board, but definitely we feel that, looking at the market scenario and the demand for our products and the work that has gone by in the last 10 years, I think we might, need more infrastructure to meet demand. I mean, that's what we believe as, as businessmen. So I hope that, our belief is supported by the market demand.
Okay, sir. Sir, just one last question. What is the current capacity utilization?
Normally, typically for a business like ours, which is not on a mass scale or which is not on a line item, so our capacity utilization would be between 75 to 80%.
Okay, sir. Okay. Thanks a lot.
Welcome.
Thank you. The next question is from the line of Keshav from Raksan Investors. Please go ahead.
Hi, sir. In terms of stickiness of the product, could you help understand how it works? Is a client the OEM that makes pumps? Is it the EPC player or the distributor? And because critical sealing is a requirement for our products, I'm assuming these would have a reasonable life. So is there any sort of stickiness involved with respect to the client we sell to? Or is it more project-to-project basis where each time we compete with the big guys?
There are two aspects to this business. One is the project business and one is the typical, you say the OEM business. So when we talk about projects, this goes via, technical qualifications with various OEMs and which are, working with the EPCs like Engineers India Limited or a Toyo or a, HNG or a Aker Camener. So that's one aspect of the business. And the other aspect would be, kind of standardized mechanical seals for chemical process pumps. So once you are approved with a particular OEM, they tend to stick with the company that has done the, standardization for them. So for example, we work with various OEMs and who are, totally committed with their, 50% requirement with Sealmatic.
Okay, so this is a pattern we see in India as well as in our export business.
I'm sorry, I didn't get the question.
So, sir, this kind of stickiness is seen in Indian business as well as the export business, right?
It is universal. It is globally the same scenario because it's a critical product. It's a product based on application know-how and a lot of engineering excellence. So it cannot be sold merely on a cost basis. It is sold on the technology basis. So if you are able to provide a solution to a customer's application, definitely that customer is going to remain with you forever. He will never change that.
So, sir, this 60% expansion that is to come, is the demand already there for this, or we'll have to sort of gestate for a while and then maybe a few months or a few years to get a full capacity utilization on this?
I see absolute demand for these products, and especially when I spoke earlier for the question by the other gentleman, that I've mentioned that there's a lot of investment happening not only in oil and gas or refinery or petrochemical. If you look at the power plants, both nuclear and thermal, or the solar power plants, or chemical plants, there's a huge expansion happening. And I believe, and I would like to believe that with the capacity expansion of 60%, even that would be less in the few years time.
But our expansion typically does not require any gestation. Is that the correct understanding? So if it goes to, if we put this up in Q3, in FY24 Q3, in FY25, we can get the full utilization out of it.
I think, while I'll answer this question a bit differently, because the product is not, sold on any capacity that you have. It's sold on basically, it's more organic. You need to solicit, to get one project, you need to solicit the end user, the OEM, the EPC, the LSTK, and it's a long process. So by, simply adding capacity, your turnover is not going to increase overnight. It's going to help you, though. But it is going to, take its time. So I see that this 60% addition of capacity is going to help us in our year, from 1st April 2024.
Sure, sir. And what year are we seeing this being optimal, fully utilized then?
I would say, very conservatively,
Hello? Hello?
Excuse me, sir. Are you on the line?
Yeah.
The lines are connected.
Yeah, I am on the line, but I can't hear.
Yeah. Mr. Balwa, can you hear me? Hello, Mr. Balwa? Ladies and gentlemen, we request you to please be patient. We will try reconnecting with the management team.
I'm there on the line, on the backup line.
All right, sir.
So I think my answer was received, or it dropped?
No, sir. It dropped midway.
Okay, your question was that when would we be utilizing the additional capacity to its full potential? And I would say
right.
that beginning 1st April 2024, we should be able to utilize the 80% of the capacity that would be announced.
Okay. Sir, lastly, if I may take one more question. So we've seen a broad range of margins. This half year we did 22%, and the last half year was 31%. So is it related to the product mix? And how should we basically read that going forward?
It's more dependent on the product mix and the kind of business we execute. So on an average, you would see a typical EBITDA year on year.
And that would be what percentage, sir?
I will like Roshan to answer this question. EBITDA for the previous year was, which you are asking. We expected it is grown by at least 28%. Not saying more.
Sorry, I didn't get you.
What Roshan is trying to say that we'll be able to maintain our EBITDA to 28%.
Okay, sir. Thank you. Thanks a lot, sir, and all the best.
Thank you. The next question is from the line of Anuj Jain from Globe Capital. Please go ahead.
Good evening, sir, and congratulations on the good set of numbers. I have a couple of questions. In terms of revenue, for FY22, our revenue breakup was like 77% exports and 23% domestic. Can you give me the breakup for FY23? What was the figure?
The breakup for export was one moment, I'm just looking at the paper. So for it was domestic 38.64 and export was 61.36 for the year that went by.
Okay. So just want to understand in terms of like from FY22 and 23, exports we are decreasing and domestic we are increasing. So is it the change in strategy or or are we going to focus on domestic markets going forward, or is it some kind of some other reason?
It would be a mix of both activities. Definitely we will not, stop our efforts in the export market. That is our mainstay. But at the same time, we feel that the country is expanding. There is huge demand for mechanical seals. And also we took our time to come to the Indian market because it's a very mature market. It's a very critical market. And here we are going to directly deal with end users, OEMs and EPCs. So unless and until you don't have a proven track record, you cannot enter the market in India. So we took our time, and we believe that we have a compelling story to tell to our customers, and we would be definitely focusing more on the Indian market. But it does not mean that we'll neglect our established market in Europe, US, and other regions.
Okay, so what kind of mix we are going to? What would be the perfect mix for us? Is it 50-50, or we are going to major share in the domestic market? What kind of revenue-wise we are comfortable?
I think if you look at the midterm, say 3 years time, I would be happy to change the scenario: 60% India and 40% export.
Okay. And the way we are listening in the news, and we are looking at Europe and US that they are going into recession. There are lots of lots of economic activity in terms of PMI data and other various factors. So do we see any kind of green shoots over there, or that is the reason that we are decreasing our focus in Europe and US market?
I would say that our product is recession-proof. Our product is COVID-proof. If you look at the 2 years of COVID that went by, and if you look at our balance sheet and performance, we have increased our turnover and profit.
Right.
So these products are critical. They are required. And no matter what, if there's a recession, but they need to run a refinery, or they need to run a power plant, or they need to run a petrochemical plant, and these products are required. So I have never seen in my 35 years of experience any cyclic disturbance affecting our business.
Okay. And just can you help me out with the industry-wise breakup of our revenue of like 60 odd crores, 59 odd crores, and so what was the industry-wise breakup of that revenue, if you could?
So if I need to go on the thread bank, it need to be more specific. What is your question? So because the breakup can be wide and numerous. So if you can just help me with what
which is the major industry that is contributing to the revenues? Is it oil and gas, or is it power, or some other?
I'll just like to highlight over here that refinery, which is onshore, would be 25%, oil and gas another 20%, power would be 15%, petrochemical 10%, chemical fertilizer 10%, and then pharmaceutical 5%, steel 5%, cement 5%, and marine 5%. So that's the breakup.
Okay, and so we are comfortable going forward with this, or are we going to increase our focus on any particular industry that we want a major share over there, or some that would be the lucrative one or something like that? So
at the moment, our major pumping ground would be refinery, which would include oil and gas. Then I would say power, both nuclear and thermal, and petrochemical and chemical. So that I would say that summarizes a majority of the market requirement, and that's one of the most profitable businesses for any mechanical seal company globally. So I would still like to focus in this area because it's critical. Actually, it is highly profitable, and thirdly, it has got a long life cycle. The equipment in such a industry are having a life cycle of 30 years. So you are sorted for 30 years. So if you put one seal into a refinery, say for example Jamnagar, and that seal will give you business annuity for 30 years, till the lifetime of the equipment.
Got it. And sir, just in the previous question, we have guided for some 30% kind of CAGR revenue growth for next 3 years. And currently we are having the EBITDA margin of somewhere in the range of 25 to 28%. So, and we have just guided for 28% kind of sustainable EBITDA margin. So is it right? That we are going to maintain that plus minus 1 or 2% here and there. But is this going to be sustainable, these kind of EBITDA margin?
The EBITDA margin definitely is sustainable as we see and from the balance sheet of the last 2 years, where we have done a lot of project activity as well. And as I've repeated in the earlier questions, that our golden period would start from first of April 2026. That's when we would be encashing on all the operation and maintenance basis.
Okay. And just one last question. In terms of margin, which is the best? Which is the better geographical thing, like domestic or overseas, in terms of margin?
Yeah, in terms of margin, definitely. I would like to break this into two segments, because here in India you directly dealing with end users, so your margins are much higher over here. Whereas when you're operating in the US or in Europe, you don't directly typically deal with the end user. You go via a distributor. So definitely margins are lesser in the exports, but in the long run, the margins would be much higher here in the domestic.
Got it, sir. Got it. So that's it from my side, and all the very best to you, sir.
Thank you, sir.
Thank you. The next question is from the line of Ajay Sharma from Sycus Investment Advisors. Please go ahead.
Hi, thanks for taking my call. This is a really interesting company in a really niche kind of industry. So I was just wondering if you could give us some insight into how the economics of the business really works. For instance, how does competition work? Is it just by the expertise of the company, or is there cost competition? Would an Indian OEM have any preference for a local producer versus a foreign producer? Can you just talk about these things, please?
Have you finished the question, or you're still continuing, sir?
I'm finished now, but I have a few more questions that I can follow up with.
Okay. So the product is not sold on price ever. So the basic criteria is mainly technology driven. So unless and until you have that experience of this product, and for us, myself, I have spent more than 34 years in this business, along with my co-promoter, Mr. Chaudhary, who has equal number of years of experience. And also, because of our, association with Bergman, which is one of the largest, companies globally and the largest here in India. So that also gives a lot of weightage to all the customers, whether they are an OEM or whether it's an EPC like EIL or an end user like Reliance or IOCL. So unless and until you don't have that, technological capabilities, your customer is never going to talk to you, come what may.
Okay. So as a percentage of the overall cost of the project, the cost of a mechanical seal will probably be very tiny, right?
As regards to the cost of the project?
Yeah. So relative to the cost of a power plant.
It's difficult to answer this question because the project would surmise of many of the equipment, like pipes, fittings, valves, pumps, compressors, and many other, ancillary equipment. So it would be difficult to, really put a figure and how much would a mechanical seal, constitute to the cost of the entire project.
Okay, I understand. And would it be possible for you to give us a breakup of your revenue from the project business versus from the OEM business?
Project and OEM go hand in hand, because if you are talking about a project, say a project which is done by Reliance, and say they have, entrusted the engineering and procurement to, say, a Toyo. So, it goes hand in hand because on the one hand, we have the end user, on the other hand, we have a, EPC, and then on the other hand, we have the OEM to whom we have to supply the product. So, typically when a project is being discussed or envisaged, a huge dossier is prepared by the project consultant, which would run into thousands of pages. And in that thousands of pages, you will see everything specified. Say a pump will be specified, which are the main which are expected for this project, a bearing, a coupling, a motor, and also mechanical seal. So unless and until I don't appear in that project data sheet, I will never get an inquiry. So I appear in all the data sheets of EIL or any consultant such as a Toyo or a Tyson Group or a Worley or a Baker Hughes. I appear in their data sheet. I also appear in the data sheet of IFPL, BPCL, HPCL, Reliance, which takes many years to get over there. So that's the way this project and OEM business works. So once you have this opportunity to participate in this project business, you subsidize. Definitely there's a rat race because everybody knows that once you're in as an OEM, you are going to have annuity for the next 30 years when the pump gets commissioned and the end user. For this case, we're talking about example Reliance. So if my steel goes fitted into a pump and goes to Jamnagar, I'm sorted for 30 years. So that's how the business works.
Okay, and just about this last point, this is also my last question. How should we think about the lifetime profit from one project? So if you supply, what % of the lifetime profit will come from the immediate sale of the mechanical seal versus the 30-year maintenance that you would also do?
Okay. Can I answer?
Yeah, please go ahead.
Okay. So, once the pump, once the steel is supplied to the pump OEM, and the pump gets applied to the site, say for example, we are just for hypothetically talking about Reliance in Jamnagar. So it would typically take 2.5 years to commission that pump because there are many other peripheral activities happening simultaneously at the site. So on the third year, you start generating revenue from that steel supply for the next 30 years.
Okay. And how much would that revenue be as a proportion of the cost of the mechanical seal? If the cost of the mechanical seal is 100 rupees upfront cost, will the maintenance revenue be like 10 rupees per year or 5 rupees per year?
When we are supplying as a project, you're bleeding on that project. So I wouldn't like to compare that cost, but then when we are doing I'll just give you a ballpark, figure for you to have a better understanding how this business works. Though I'm revealing my secrets over here, but I don't mind doing that. So once you are going to the end user, you are going to supply and recover the cost that you made at the project stage. That is number one. And number two, that is a highly profitable business. It's predominantly all these big, steel companies. They have huge margins. They have huge margins on the end user business.
Okay. I think that's it from my side. Thank you very much, and all the best.
You're welcome.
Thank you. We have the next question from the line of Dhruv Veda from Jairam Stock Brokers. Please go ahead.
Yeah, thank you for taking my question. So at the outset, I would like to congratulate the management for posting such good set of numbers for the financial year 22-23. I would also like to thank the management for keeping this call so that the investors get an opportunity to interact with the management. Now, coming to my first question, as you have mentioned for the earlier questions, you have told that a lot of companies have come up with a lot of capex, particularly in the sectors in which you are catering. So can we expect a better growth rate than the industry which we are currently working on?
Yes, definitely. If you look at our performance in the last 2 or 3 years, we have are much ahead of the industry growth. So the example I would say, if the industry has grown by say 20%, we have grown by 28, 29%, and this phenomenon is going to be much significant as we move forward and come to circa April 2026, where we believe that we'll have our golden period, and that's what I call the Chandragupta Maurya period for Sealmatic.
Okay, thank you. And my second question is, you have mentioned that Sealmatic is entering into a highly critical application, say in the field of nuclear power and all. So are you looking for any defense-related applications too for mechanical seals?
Yes, in fact, we are very well placed. There are many reasons that I will just try and explain to you about the reasons that we are well placed. Because on the military applications, most of these foreign companies have restrictions to participate in any tender which is naval or air force. So that leaves the door open for companies like us who are qualified, and we are at the moment working with Mazagon Dock, with Vizag shipyard, with Goa shipyard, and we have very interesting projects on which we are very well placed. And they are long, of course, they are long and drawn projects because it takes years and years to build a warship, for example. So we have tremendous bandwidth in terms of product offering and also the qualification to design teams for not only for the for surface on the seawater ship, also on the submarine. So that's the kind of product offering that we have for anything to do with naval business or air force.
Okay, fine. Thank you. Thank you so much, and all the best for the future.
Okay, sir.
Thank you. The next question is from the line of C.A. Varun Agarwal, an individual investor. Please go ahead.
Thank you for the opportunity and congratulations for the great set of numbers. I also appreciate the initiative of conducting the earnings call immediately after getting listed. So my first question is, what is the average inventory days what we maintain, and what is the credit period which we give to the customers on an average?
The credit period that we offer to our customers, typically in India, would be 45 days. When we only work with Fortune 500 companies. We don't go down the road with companies with whom we feel that money would be a problem. So when we work with Reliance or ISL, BPCL, HPCL, GAIL, NTPC, nuclear power, your money is guaranteed. You get your account in maximum 60 days time. And being an MSME company, there is a mandate from the government, so the payment has to be made in that time. Except there are notorious, customers. Sometimes they don't respect this mandate, but by and large, the money comes into the account without much of any hassle, or it automatically just hits your account.
And how many months of inventory do we maintain on an average?
Currently, we are holding inventory for 4 months.
Okay. And going further, this is the normal practice of this business, or this can be further reduced?
So this is, I would say, my experience. I can only talk from my experience for so many years, and I've worked with a multinational company as well. I mean, this is typical because this is tailor-made for us. We don't know what the requirement is going to be, so we need to be prepared for any special requirement which comes from the customer.
Okay, got it.
Items and also the raw materials are exotic. These are not available in the ready market. So you can't order one piece.
Okay, understood. Out of this cash balance of 40 crores what we have on the balance sheet, how much we are going to use for this current capacity addition, which is going to get completed at the end of this year?
Approximately 12 crores is what we have earmarked for expansion.
Okay. Thank you so much, and wish you the best for the coming year.
You're welcome, sir. Thank you so much.
Thank you. We have the next question from the line of Rajesh Tripathi, an individual investor. Please go ahead.
Hello, am I audible?
Yes, you are audible, sir. You may proceed.
First of all, congratulations on the set of numbers, and really appreciate putting all these help investors to connect with the management directly and.
Sir, sorry to interrupt, but you are not very clear on the audio, sir. Will you please use the handset while you're speaking?
Sure. Hello, is it okay now?
It's much better, sir.
Okay, I had a couple of questions. The first one, what is the current order book for the company? And the second one is that in one of the interviews I had read that the company is targeting to capture around 15% of the market share in mechanical seals by FY28. So are we on track to achieve that figure?
Sir, I didn't get the first question, but I got this one, so I'll answer this one, and I'll request to repeat the first one. So when we talk about 15% market share, is for the new requirement, not what has been installed, so that cannot change.
Okay.
So we are on track. Definitely for any new project which is coming in the market, we have more than 15% share, I would say.
Okay, that's for the new revenues. Okay, my first question was, what is the current order book for the company?
I don't have the figure, but it is quite robust and strong order booking we have.
Okay. Okay. Thank you. Thank you.
Thank you. The next question is from the line of Sanjay Kumar from iThought Portfolio Management. Please go ahead.
Hi, sir. Thanks for the opportunity. First, few clarifications. So you said that you will utilize 80% of the new capacity in FY25 itself, in the first year itself. Is that right?
Of the enhanced capacity, if you are referring to that one?
Yeah.
Yeah, that would be correct.
Okay. And of the domestic, 39% was domestic. So of this 23 crores, how much would be projects and how much is standard process pumps? Do we have that breakup? Yeah.
On the domestic, I would like to, answer it differently, because when we talk about, domestic, when it refers to OEM and project, it's a culmination of so many products made. It would be extremely difficult to answer it in a very central manner, but I can give a lump sum of figures. So OEM and project would be approximately 45%.
The rest is standard pumps.
Yeah, rest would be standard, yeah.
Okay. And so you spoke about Reliance example. Have you won any other project orders in FY23? Have we, KSB said that they will supply their first nuclear pump in H2 of FY24. Are we supplying the seal for that? So if you could give any other examples for projects that we are working on, that would be very helpful.
Currently we are working on many projects. The most hectic activity which is happening in the country today for our industry is IOCL. So we are participating in all the projects, may it be Baroda, may it be Panipat, Mathura, Guwahati, Paradip. We are participating every possible project via OEM, and we are appearing in the approved vendor list of IOCL. So by default, every inquiry comes to us. It is up to us how much we want to take from their inquiry. And when we talk about a power plant, the BHL is the only turnkey, contractor for all the power plants in the country. 90% still would be catered by BHL, and we are well placed with BHL. We are one of the most reliable suppliers for BHL. We are the first company in India, indigenously, which has been approved by BHL. In the last 40 years, they never got an opportunity or nobody challenged that vendor list. So we are the company which appears as an indigenous company along with foreign companies, which is approved by BHL. So that's where we are participating. We on a long-term places we see a great potential in the nuclear power sector, because if you look at the Jaitapur project in Ratnagiri, that itself is one of the largest nuclear power installations globally. That's about 10,000 megawatts in one location. And we are strongly after that project. And to get into the project, we have got ourselves certified as ISO 19443, which would be the nuclear certificate. So that's the kind of activity we are talking about.
Jaitapur to be by the French company, right? I think WPI will be the pump OEM for that.
It's Ariva, yeah.
Ariva, right. So we are already in touch with Ariva, is it?
Yes, because Ariva only certifies vendors who have qualified as ISO 19443. And if I may take some time to explain the significance of 19443, it takes about 2 years period to get that certification if you qualify. It's not that anybody can go and qualify. And secondly, the audit happens from France. It doesn't happen from India. So there were auditors from France who came to India and audited our, factory.
Okay, and this is Jaitapur. But for the other projects, Kaiga, Gorakhpur, have we been approved by KSB?
Okay. KSB is one of the vendors. There are many other vendors who will be supplying. KSB is supplying the primary coolant pump. Along with the primary coolant pump, there are many other pumps, involved into a nuclear power plant. So KSB is just one segment of that power plant. So we are working with, say, example, Sulzer, we are working with Client Union, we are working with PO, we are working with everybody who's us. Even BHL is now going for nuclear applications. So we are working very strongly with BHL as well. So when we talk about, say, Kaiga or a Tarapur or a Kakrapar or a Naroda or a Rajasthan, we are working across the board on the nuclear application.
Okay, that's very good to hear. And on exports, I think most of our exports are mostly to resellers. So where are we on the journey to crack global OEMs? Are we looking at any overseas questions? Yes, sir.
Yeah, okay. When we talk about OEMs, say we work with all the leading global OEMs from here in India, say maybe a KSB or a Sulzer or a Andrin or a Agger or a Weir or ITD. So these are all global hubs for the OEM where they do global sourcing from India. So some of the seeds which we supply to this OEM are definitely going across the globe, somewhere maybe in Africa, somewhere in the Southern American region, sometimes in the Middle East or in the Asian region. So that's how our seeds are getting populated across the globe. And that's the whole reason that why we work with OEM. Because via the OEM, you open the door with the end user.
Right. Okay, got it. And any thoughts on acquiring a global company abroad?
I'm sorry, I didn't get the question.
Are we looking at acquiring any companies globally, overseas?
Yeah, I would love to do that. And it's an ongoing process. We are, constantly evaluating opportunities which are, which we feel would be, adding value to our company. So yeah, definitely if something comes very interesting and which would add value to me, I would definitely look at it with much more seriously.
Okay, and the cash balance of 40 crores, you said 12 crores for expansion. Any plans for the rest 28 crores?
Basically, I would like to expand much more intensely into India. As we think we are in the process of commissioning our sales and service center in Kolkata. We are expanding in Pune. We are also putting our sales and service center in Chennai. Apart from that, we are looking very seriously at the Middle East, because many reasons for doing Middle East is that number one, it is easily accessible from India. You can take a 2 or 3 hour flight and you are somewhere in the Middle East. A similar travel journey that you would like to, take from Bombay to Kolkata, it would be 2 hours and 20 minutes. In 2 hours time, I would be in Oman, in Muscat. So, and also the entire, aspect community is Indian over there who actually run the plant in the Middle East. So that's one, very strong area of focus for us.
Okay, sir. And finally, on related party transactions, now that we are a listed company, we'll be looked at by investors. So just wanted some clarifications on 3 entities. First is Associated Hospitality, where we have given a loan of 1.25 crore. What is the status? What is the repayment schedule for this? And then we have Model and Greenwood Developers, where we are paying rent of 60 lakhs every year. What is this facility for? Is it at arm's length? And finally, there's this company called Sealmatic India, where we are selling almost 40 lakhs of goods. So just clarifications on three entities.
Maybe I'll start with Model and Greenwood.
Right.
That's a landlord.
Landlord. Okay. So that's where
if you take the arm's length, justification is much lesser than the market value.
Okay, perfect. The other two, sir?
Sealmatic is a joint venture between Isomac and Sealmatic, and it is now, decoupled from a joint venture. So we make products for them and we supply to them at a profit. So that's a normal transaction, I would say.
Okay. And Associated Hospitality, where we've given a loan.
Yes. For our initial plan was to acquire, land and build premises in common. So for that, we were evaluating a lot of properties in that area, and Associated Hospital is into this business of making industrial parks. So we entrusted that assignment to them sometime last year in June. But later on, we felt that it would be much more, sensible that we lease those premises rather than building land and building and then owning it. So we deferred that idea, and we have refunded that amount to Associated Hospital. I mean, the amount got refunded. Sorry.
Okay, perfect. I think that's it from me, sir. Thanks a lot, and all the very best.
Thank you, sir.
Thank you. The next question is from the line of Vignesh Iyer from Sequent Investments. Please go ahead.
Hello. Congratulations, sir, on strong set of numbers. Sir, I was just going through our RHP, and so you mentioned something related to working capital requirement for fiscal 2024. Which shows the working capital gap of around 56 crores, out of which you'll fund it through internal accrual of 48 crores. So, sir, I'm not able to, calculate this 48 crore number based on what projections you have given for FY24, I mean, I'm not understanding how are you going to make an internal accrual of 48 crores in FY24. So if you could help me understand this.
Can you please? Because I think the question has not been understood over here.
No, sir. So I was going through Sealmatic's RHP, which you have given some projection related to fiscal 24. Okay. Which shows working capital gap of 56 crores. Which you have written funded by internal accrual 48 crores and proceeds from IPO funding 7 crores. I just want to understand how have we arrived at this figure of 48 crores of internal accrual.
So it is just expected figure-wise.
Right. I mean, I understand that, but then, if we grow by 30% even for the base of FY23, I'm not sure how are we making free cash flows to fund our, operating cash flows to fund the internal accrual.
Our working capital will be increased because we are regularly receiving the payment from the debtors and paying to the creditor on time. So, and the sales are also increasing. So I think we have a good working capital with us. and expected that it is going to increase.
Oh, sorry. Okay, fine. Just one more question. When you say that you'll be having 15% market share of whatever the new business that would be coming, could you just give us a ballpark number of what is the total market estimate you have? Any internal calculations that you have?
If you can be kind enough to repeat the question because I didn't understand.
Hold on. Yeah. Am I audible? Hello?
Yes. You're audible.
Yeah. So when you say that you would be having more than 15% market share of whatever the new businesses that are coming in next few years, do you have any internal estimates of or a ballpark number of what the size of the business would be? I mean, and the probability of the order win.
Yeah, I would say the new business which would come via OEMs and projects would be. I can put a number. I will not be able to put a percentage. So let me just say the new project and OEM business which is going to come up this year, for example, would be close to about 80 crores. Example.
Right.
And it would again for the next year would be say about 110 crores, and it would increase so on and so forth because a lot of projects are getting implemented. New projects will also get added into the expansion of the capacity of the various plants across the country.
Right. Okay. Fair enough. And that's all from my side, sir. All the best.
Thank you, sir.
Thank you. The next question is from the line of Amit Chandak, an individual investor. Please go ahead.
Hello, sir. I would like to ask you a couple of questions. The first one is that you had raised 40 crores through the IPO. 12 crores you have a concrete plan. What about the rest 28 crores plan? The concrete plan I'm looking forward to. The second one is that since your cash flow was negative, what was the need of paying the dividend at this point of time to the shareholders since the cash flow is negative? And so these are the two questions.
Also, regarding the 41 crores, also we hear concrete plan for 12 crores for the machinery and plant in purchase, and then we are.
And also, I think I have answered this question, brother gentleman, just maybe you missed it. So we would be expanding into various geographies in India, Middle East is a foray for us, and also would like to strengthen our efforts in USA, in Europe. So that's the kind of investment would go into sales and marketing, and also would envisage research and development, which would allow us to get into higher up into the segment of critical products, which are being currently dominated by international companies. So that's the investment that we're looking at.
Any particular timeline, sir?
Sorry?
Any particular timeline?
For the expansion of plant and machinery, I would say by end of the year, we should be able to fully commission our expansion. So we are under negotiation with various equipment suppliers, various machine suppliers, and a host of other ancillary equipment. So that expansion of 12 crores we expect to by the end of the year.
I'm looking forward for the balance 28 crores. 12 crores we are clear. But what about this 28 crores you are parking in right now, the banks, etc.? So what is the plan for utilizing it?
I mean, there is definitely a plan, but it just cannot be deployed, overnight. I mean, if you do research and development, for example, there will be an amount of 3 crores. It just can't be deployed overnight. It's a constant and a continuous process. So, I mean, there's a timeline to signify. I think it would be difficult. Research and development is a continuous process, and so is penetration into any market. It just cannot happen overnight. You need to go and deploy your resources. You need to go and sit over there. You need to invest money into market research. You need to invest money into visiting customers. You need to participate into exhibitions, trade fairs, symposiums, and so many other activities. So, signify a timeline would be a bit difficult and impossible. But yes,
understood.
Sorry, I'll finish.
Yeah, please.
Okay. In the period of 18 months' time, we should be able to deploy all the funds that we have raised via the public issue.
Great, sir. Only one question: if we have got the funds in our banks, we have got long-term borrowings also. So, any particular need of having the long-term borrowings? Otherwise, we can offset this. We can repay our long-term borrowings to this.
The borrowings were done prior to the public issue, and the borrowings were done mainly from institutes like Citi and other and they have supported us when we needed money, and it's a request from them that we continue this borrowing for a while, but definitely we can offset against money that is coming, and it's not significant. It's not a big amount that we're talking about. It's about 4 crores.
Okay. The last question of mine was that since the cash flow was negative for this half year ended, any particular need of paying the shareholders the dividend out of the capital base, not out of the revenue income?
We are maintaining the reputation of the company, and therefore we recommended the dividend. Last year we also, in September, we also recommended the dividend. Therefore also this time we recommended the dividend.
So if I'm correct, you are saying to maintain reputation of the company.
No, not really. I mean, I would answer differently because we feel there is unutilized resources available. So deploy with the investors, with the shareholders, and it's not a very significant amount that we're talking about.
Yeah, understood. But the retail is only I'm saying a minor portion only. Understood. Okay. Thank you.
Thank you.
Thank you. The next question is from the line of Abhijit from MAP Investments. Please go ahead.
Hello.
Yes, you're on. So you may go ahead.
Yeah. Thank you, sir, for taking the question. I just wanted to know, I understand there's a lot of competition from foreign players in the steel market, right? Are there any domestic players that you compete with your company as well? That would be my question. Thank you.
Yeah, predominantly the market is governed by 3 international players, not only in India, but you'll find them everywhere, globally. And of course, any market, any domestic market, may it be India or may it be another country, you'll always have local players, operating. But those players do not matter to us in a sense. They don't operate in the domain that we operate in. Say, for example, oil and gas or a refinery or a petrochemical. So these local players are not participating because they are qualified. So our competition is mainly with the international companies.
Thank you. Thank you for that.
Thank you. The next question is from the line of Ravi, an individual investor. Please go ahead. Ravi, the line.
Hello, I'm audible.
Yes.
I'm audible?
Yes, you are.
Yes, sir. Thank you for taking my question. My question is, sir, as you said, both these properties are on lease.
Which property are you referring to, sir?
The one is which is upcoming.
Common.
Yes.
Yeah, it's a long-term lease.
Okay, sir. Okay, got it. My second question is, as you said, we are mainly into the oil and refinery. So, in the next 2 years, from which sector you are seeing you will be getting orders majorly, means from other sectors, other growing sectors?
At the moment for us, the growing sector would be oil and gas, or refinery, petrochemical, power plant, and of course chemical would follow them. So that's the sector which is for us very interesting and an area of focus for us.
Okay. So are we into that solar and something in green hydrogen also?
Yes, anything which is conveying media in any kind of form, may it be a liquid or a gas or any other medium, a mechanical steel comes into play. May it be a solar power plant, or may it be a hydrogen cell unit, or may it be a hydropower, for example. So a steel is always deployed.
Okay. So my next question is, as you said, they are not a major players, and we mainly deals with the Fortune 500 companies. So how do we approach the company? Is there something called bidder side, bidder things like this, something like that? Are you doing the bidding?
Sorry, yeah.
For getting the order, are you doing the bidding, or the customer keeps coming to us?
Okay, I'll answer it. Say, for example, when we talk about the Fortune 500 companies, there's a due process of a vendor approval. Unless and until you don't qualify as a technically qualified vendor, you don't get approved. Say, for example, an approval for IOCL would take about 5-6 years, provided you are qualified. Reliance would take 7 years because it's a grueling process and it takes many, many years to get qualified over there. So once you get qualified, your name appears in the approved vendor list. So whenever a new project, may it be a 1 firm or a 10 firm or 100 firm, inquiries being floated in the market by that particular end user, may it be Reliance or ISL or BPCL, the firm OEM would get in a data sheet which would say Sealmatic as one of the approved vendors. So we would get an inquiry and we would bid to the OEM, and the OEM then, depending on the various factors, price, delivery, and whatever it is, will package the pump and sell it to the end user. So that's how it works.
Okay. So can you name some competitors? Who are the competitors for us in these fields?
Competitors would be my erstwhile company, which I started in India, would be Eagle Bergman. Did you get the name correct?
Oh, yeah, I'm getting it. Yeah. You can go ahead. Yes.
Okay. And the second would be John Crane.
Okay.
And the third would be Flowserve.
Okay. Got it. Sir, my last question is, what are the sustainable margins we can expect in the coming, as you said, from FY26 will be the golden year for the company. But for the next 2 to 3 years, what are the sustainable margins we can expect?
It would be similar to what we have done in the past. So I'm not much, worried about that, because we also do very scientific approach to taking orders and balancing them out. We don't want to blow too much of cash away by taking too much of project. So we balance it out with end users, resellers, project and OEM. So our margins would be similar to what we have done in the past. Until 2026, from 2026, we believe that it would be a golden period for Sealmatic.
Okay, sir. Sir, and last question. Sir, how are that raw material prices fluctuates the margin? Means we are, I think, into the metal prices also make some fluctuations in the margins?
Metal pricing? Did you refer to metal pricing?
Yes.
We don't sell on cost of raw material over here.
Okay. So you mainly import the material from countries like US and UK?
US, UK, Germany are the major, sources for critical components.
Okay. Thank you. That's it from my side. Thank you for taking my question. Thank you.
Thank you, sir. Thank you.
Thank you. The next question is from the line of Anirudh Shetty from Solidarity Investment Managers. Please go ahead.
Thank you for the opportunity. So my first question is, you mentioned the 3 global competitors, and I just wanted to check, would you say SKF also is a competitor for you guys in India? Do they have meaningful presence here?
No, SKF makes ball bearings.
Okay.
SKF
they are not
Sorry?
Okay, so they are not a competitor in mechanical steel?
No, SKF, in fact, SKF would be a customer for us for our other products.
Okay, got it. And if we compare, our product portfolio today, our technology capabilities, the perception that we might have with the customer, how would you compare us vis-a-vis the top three guys today, versus say probably 5 years back?
I would say, I'm not as big as them, but I'm as good as them. So I would simply put it in this manner. In terms of capabilities, on the technical capabilities, I'm equivalent. In terms of, application know-how, I'm as good as them. In terms of product offering, I would say I'm 95% to what they have. So if I compare myself with the global peers in this business, I am as good as them. And if you look at Sealmatic in the tier 2, I'm the world's best company, and I don't want to sound pompous about this, but I mean that's the fact. So our infrastructure over here in Mira Road is state of the art. We have all the qualifications which most of the steel companies, including the three big boys, don't have in India. So I have that kind of certification. I have that kind of testing equipment without which I don't qualify with customers like DHL. So in terms of Sealmatic being compared with the three big boys, I'm as good as them.
Got it. We spoke about this golden period for margins post 2026. So, in that kind of scenario, once the O&M business starts dominating our sales, what kind of margins can one be looking at in that period?
Typically, the O&M business is extremely lucrative. And even if you look at the balance sheet of my peers of the three big boys, they're robust, they're healthy, and for us, today our EBITDA looks at 28%. It would definitely improve from here, from this position.
And I was reading somewhere that KSB, which makes pumps, I was going to their website and I also see that they have some sort of mechanical steel product. So are we seeing instances wherein the pump guys are also looking to get into mechanical steel?
It's a difficult proposition for a pump company to get into mechanical steel. But yeah, what you're looking at the KSB side is something which they do on a very small scale for the very specialized pumps for the nuclear application. So they have a very small portion of that. Otherwise, the other standard products are being supplied by companies like Sealmatic.
Got it. And just one final question that we have the capabilities, we've got the capex coming through, we have the relationship with the customers. So the growth prospect seems very bright for our company. Just wanted your sense on what are the key risks that keep you worried from a more long-term perspective.
I don't see any I can only talk from the years that I've been by and my own experience of 35 years, including the Kuwait war or so many other factors. Or let me just give you a small example about this Ukraine war. Now everybody talks about a war, but there's also a positive side. I'm talking about war being a positive for us, but then Russia was one country which I tried very hard for the last 10 years, and I could not put my foot in the door. But with this Ukraine war starting and there are heavy sanctions from all the European countries and the Western world, and including America, they have nowhere else to go but to come to India. And I can say with such pride that in the last 8 months' time, I've seen close to about 16 Russians coming here at Mira Road. You wouldn't even know where Mira Road is, but they've taken the trouble to come here and seek our help in supplying these products for them to run their plant. So for us, I don't see any, because these are critical components. Unless a refinery, still it's a positive for us. It gets destroyed in a war situation. But somebody has to build a new refinery. So we have more, modern refineries, more modern mechanical things coming into it. So for us, I would take the example of COVID. We grew our business.
So would it be fair to assume that while the opportunity is there in India because, for the relationships that we build, but even globally that also is a pretty large opportunity where we also have the relationships and the market size is larger and even that should keep growing for us as well?
Yes, of course, if you look at the, figures that we have, of course our, constitution of percentage would increase more on the Indian business, because that's when we feel that we are interacting with, the end user directly, and in the coming years, we will be having more O&M business, and that would increase our profit. But at the same time, our focus still, is there very much, stable with Europe and America. It's a huge market. Nobody can ignore Europe and America. So that's the focus for us. In fact, we are participating in various exhibitions. One exhibition which is going to happen in September, we are participating in Houston, which is the Mecca of oil and gas. We are putting up our stall and going to display our products. Then when we talk about Europe, the world's largest chemical exhibition happens in Europe, Frankfurt, every 3 years. We are participating in that exhibition next year. We have a large exhibition coming up in the Middle East, which is called the ADIPAC. We are participating there. So, that's the kind of investment they're putting in the market and reaching out to global customers. And we are not leaving any stone unturned. We are not leaving any effort, spared. We are, trying to corner the market from every side which we feel we can reach out to and we can solve the market.
Got it. Sir, it seems that you guys are on a very good footing, so I wish you all the very best for the future.
Thank you so much. Thank you so much.
Thank you. The next question is from the line of Hemant, an individual investor. Please go ahead.
Sir, thank you for the follow-up. Sir, as you said that from 1st April 2026, it will be the golden period for the company because the O&M revenues will start kicking in. So just wanted to get a sense, because the O&M revenue must also have been a part of the sales right now also, right?
Not so much, sorry, please, I'll allow you to complete the question. Please go ahead.
So, what I was trying to understand that O&M revenues must also have been a part of the sales right now. So, how will it contribute in a bigger sense from 2026? And sir, one more question. Sir, as you said that we'll be capturing the 15% of the new market by 2028. I understand that you cannot specify a number, but maybe a range will help, sir.
Okay, first, I'll take the first question, O&M. So, the current O&M business is not significant because O&M business only comes via OEMs and projects. So, our journey in India started in the year 2020, and just before the pandemic, hit the global scenario, we started our journey into India. But we have been very fortunate. We have been very, very, very encouraged and welcomed by all the customers across the board, be it an OEM or a LSTK or a EPC or an end user. So our journey just started in the domestic market. And to foray and to get orders, it's a continuous process. You need to get yourself approved by EIL, which is a mother body for all the EPCs that happens in the country. So unless and until you don't get that EIL approval, you won't be, entertained by any of the IOCL or a BPC or a SPCL. So having completed that entire journey, our project business has just, started say about 8 or 9 months back, whereby we are, heavily investing into OEMs and projects. So once we supply this product, and that is why I say our golden period will start in 2026. So we are supplying this product. So at the moment, we don't have much of O&M. And the second question about the 15% new market. So when we talk about new markets would only come via OEMs and new projects. So I answered this question about, I think, about 10 minutes ago. And this year we see a new OEM and project business to about 80 crores. That's what we see that, new OEM or new projects. For the year further would be approximately 110 crores and would be 160 or 170 crores of new projects, new mechanical things being procured. And this, once they go to the end users, it will generate multi-fold business for any company, not only for Sealmatic, it would be anybody else as well. Everybody is going to reach the same fruit.
So, sir, you mean to say that 160 crores plus 110 crores plus 80 crores, this will be the new market opportunity by FY28?
For me, if the projects are on stream, they're on track, I think the new capacities would get added. And we feel, I think probably I need to clarify, by 2028, I mean to say that at that point in time, we should be in a position to acquire anything which is coming new in the market, say about 15%.
Yes, sir. I'm just trying to get a number, sir. So 80 crores plus 100,
No, I think you are getting a bit. Maybe I've not been able to express it properly. I think by 2028 we would be in a position to acquire 15% of any new business. So not necessarily that it will happen in this year or the next year or the next year. By 2028, any new project coming in India, you would be in a position to take 15% of the market of the new project.
Okay, sir. Okay, got it. Thanks a lot, sir.
Thank you very much.
Thank you. Ladies and gentlemen, that was our last question for today. I would now like to hand the conference over to Mr. Umar A. K. Balwa, Managing Director of Sealmatic India Limited, for closing comments. Over to you, sir.
Thank you so much, Robin, and I see 74 participants. I thank everybody for taking their valuable time and attending this earnings call and also asking questions. And while answering those questions, it also builds a lot of confidence when I'm trying to answer those questions. And I feel that by these questions, I feel that I'm on the right path in my journey for making Sealmatic as one of the leading companies, not only in India, globally. So I thank you all for your attention, and I look forward to your continued support and trust in Sealmatic.
Thank you. On behalf of Sealmatic India Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines.